Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today I'm going to show you how I print money and then we buy a dividend paying stock for which that prints me money. That's right. I'm going to show you how I generate the massive amounts of monthly income and then what I do with it. See, I can make all this money with a trade. Over the years, I've realized that money can find itself in a losing trade. Standing at the top of the mountain, looking back at my some 6 or 7 years of trading and realizing I have nothing more than a trade gone good or a trade gone bad. Going forward, being 56 years old, I've decided I have a dividend paying portfolio. I have a buy and hold portfolio and I have a selling premium portfolio. What I'm going to do is take any profits from the selling premium portfolio and we're going to buy dividend paying stocks. We're going to move that into my dividend paying portfolio, generating passive income. Now, since I've been on YouTube, a lot of people say, look, I can't buy stocks or I can't buy dividend paying stocks because I don't have the extra cash. Right? I'm out there paying the bills. I have a family. I don't have the disposable income to be buying all these dividend paying stocks and then just sitting and waiting for those dividend paying stocks to pay me once a month. Well, when we write covered calls on the shares we own, we are literally printing money. So I'm going to show you how I do that with a trade that I just closed and then the dividend paying stock I bought. Now, if that hasn't excited you, I'm going to show you right now what I've been doing with my Procter & Gamble recent sell, where I have taken a buy and hold stock and I have literally decided to sell it. We're going to go ahead and write weekly covered calls to generate that fat weekly covered call premium. And we're going to turn right around and buy dividend paying stocks. This is how you get rich. Okay, we're going to get rich slowly, but we're going to get rich. If you stay diligent, if you stay disciplined, you're going to get rich. We're going to make great decisions, buying great stocks, writing good covered calls, and then with those premiums, we're going to buy good dividend paying stocks that pay us monthly dividends passively. This is how we go from having the mindset of being a trader to the mindset of being wealthy. So that's what we're going to talk about today. I'm going to show you exactly how much I'm making for the month of March, which is going to blow your mind, has beaten every record. And in fact, my March number has beaten some 4 years total. And it's unbelievable. We are clicking on all cylinders, knocking it down. But remember I said, standing at the top of the mountain and looking back? See, I want to look back. I want to see a dividend tree garden. I want to see multiple dividend trees paying monthly dividends where I have positive passive income just coming in. So I don't have to worry about the bills anymore because all of my passive income pays for it. But again, how are you going to do that if you don't have the money? If you don't have the money to buy the dividend paying stocks, you can't take that money out of your family's bankroll to live your life. The only way you could really do it is using your stocks, writing covered calls, and boom, you printed money. That money, we're going to buy dividend paying stocks. Getting wealthy. So let's go ahead and get to this because I absolutely know you're digging this one. If you like anything you hear today and you want to be a part of it, you got to subscribe to the channel. Come back every week showing you timely and relevant ways to get wealthy. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. I'm showing you exactly what I do with the money I make. And it's so funny, man. I see so many YouTubers out there talking to you, but they don't really show you anything. And when they do show you something, it's like they don't show you real money. I'm all about the real money because that's what we have to pay the bills, live the good life. This is a situation where I had Procter & Gamble. It had doubled since the time that I've owned it. Well, it paid about a $300 dividend every 3 months. So that's about $1,200 a year. But for the most part, Procter & Gamble just sat in the account, did nothing, dropped the $300 every 3 months. Now, granted, it had doubled over the past 11 to 12 years, but I'm thinking to myself, man, I could do better with that. So what I decided to do was this. I went ahead and wrote a covered call on Procter & Gamble, had my shares taken away, and what we decided to do was start writing weekly covered calls. We started writing in the money weekly covered calls, generating some $400 to $700 weekly. Now, what you're seeing here is the result of that. Okay, these are real numbers. I can prove it all. We went ahead and started this on February 5th. And as you can see, every single trade is a 1-week trade. And if you really dig into the numbers, you will see they were all in the money strikes. And what we're looking to do is generate a time value premium, but also have the shares taken away. So with about $37,000, by the way, I wanted to preserve that dividend. Remember that dividend I got? Well, I went ahead and bought 500 shares of QQQY. That's going to pay me, based on the recent payouts, some $300 a month. So that preserves the dividend that PG was giving me. So we're going to think smart. We're going to make right decisions, right? So I preserve the dividend by taking some $8,500 out of the Procter & Gamble sell, and we bought QQQY. We're getting $300 a month, preserving the dividend. Now, with about $36,000, I have now been churning that weekly covered calls, generating what you see here. As of right now, you can see this is every single week. It does not matter if it's $300 or $700. We take it, we move on. And in fact, this week's covered call is going to drop some $900. And that's just because of where the trade had laid. We did an in the money TQ's covered call. We're going to have our shares taken away this Friday. And we're doing this and we're churning this. I consider it, for me, it's something I do. You can see these are all my trades. If you've been watching my channel, you know what my total income tracker looks like, and there they are. I just plug them in and you can see what I make. And every single week I'm doing this, knocking down thousands of dollars. Now, as you can see, I'm collecting the YMAX ETF, which pays a monthly dividend. This monthly dividend is about 56 cents a month, and that's per share. So my goal is this. I'm going to write covered calls using the Procter & Gamble money, and we're going to get to 1,500 shares. And then we're going to find another tree, another dividend-paying stock. And that's going to churn and churn and churn. See, we're using covered calls to print money. We're using that printed money to then buy a dividend-paying stock. Passive income. And that's what we're doing. And if you remember, just last month, I was collecting PY. I did collect some 1,500 shares, and we moved on to YMAX. So right now, PY is paying me $1,550 per month, every single month. And I don't have to do anything. And here's the deal. All of that money to buy those shares, 100% writing covered calls, taking the premiums, and buying PY. So if you're interested in this, you absolutely need to subscribe to my channel, because I'm talking about real world stuff. And I'm actually in the trenches, man. I'm making these trades every single day. Today I took $3,000 off the board, scalping money, and we put those trades on for next week. We are literally knocking it down. And in fact, I'm going to show you what March looks like right now. You know, I have no problem showing people my trades or my P&L. This is amazing. We write covered calls and we do it again. We write another covered call, we do it again. Somehow, some of you folks out there just cannot believe when somebody has success. And you want to throw it at me and say, well, show me your IRS returns or show me this, that, or that. Listen, you either want to hear what I have to say and get motivated and maybe you go out and find your success. Look, man, you sitting here being critical, you just don't know what you're talking about. And at the end of the day, you actually motivated me to do more, because the people that actually want to see what I'm doing, you fire me up to come back and show them not all the money I make, but to show them that you can do this. See, you don't need to do this with 2,000 shares. All you need is 100 shares of an optional stock. And yes, the numbers aren't going to be as big, but they will be. They will be, because I started with one stock and I could prove that. And we went from one stock to two stocks, and we went from 2 to 4 till we got to a point where we're spinning 6 stocks a month. And now I'm at a point where I got 19 positions. I'm spinning them left and right. So if you're sitting out there skeptical, what you need to be skeptical, all the TikTok videos that show you they make $50,000 in 50 seconds. Okay, because what you call that is luck. See, what I'm doing takes a skill that you can learn. See, I did my research, I did my education, I did my paper trading, and then I did my very first trade. And it changed my life forever because I was engaged and I wanted to be successful. And here I am today. So here we are. This is March. We're halfway through. It's March 18th. Look at how many trades we've done. We've done at least 32 trades. Now, you don't have to do as many trades, but I did 32 trades, and we're not done yet. You could see the number right there. If you can't see the number, let me point it to you. That is $57,000, and we're not even done. Because when you look at this year, we are absolutely rolling where my month of March turns out to be bigger than some of my actual years doing this. Quite frankly, this is unbelievable. The numbers just keep getting bigger. But what I'm here to tell you is this. The numbers may be getting bigger, but the fundamentals of this trade is no different. I can do this with 100 shares, 1,000 shares, 10,000 shares. It does not matter where the money's at. What you need to focus on is trying it, doing it, getting your experience. And once you have that success, you will get excited and want to do it more. And when you do it more, you want to be even more excited. And I'll tell you what, at the end of the day, this strategy can absolutely make you wealthy in the end. Here are these tallies over the years. You can just see the growth. By the way, that's only 3 months. So right now, God willing, this could literally be up here. What we're looking to do is just stay the course. We keep doing one trade after another. But what we do is we take that profit and we build a legacy. And that legacy is to buy dividend paying stocks. And here's the beauty of it all. Are you listening? Here is the beauty. We're literally printing money with those covered call premiums and we're buying dividend paying stocks. So look, let's go ahead and jump into a quick trade. Then I'll show you what I did with that money. This is what's going to excite you. I literally printed money to buy a dividend paying stock. That dividend paying stock is paying me $1,000 a month now. All right, so as I'm looking at my total income tracker, which you can download at cptdashboard.com for free, I want to encourage you all to do that because we can keep the numbers in front of us. You plug in your numbers, then when the trade's over, you plug in those numbers, you drop it down, and of course, all these spreadsheets then show you all of the information I just showed you with all of those numbers. So looking at any of these recent trades, I'll be honest with you. I do a lot of poor man's covered call trades, which is a little more advanced. I do a lot of in the money covered call trades, and I do cash secure puts. So the traditional out of the money covered call, I don't typically do with shares that I own. But I'm going to show you a trade that we could have done, and we're going to do it with Apple. As you can see, I have an Apple poor man's covered call trade open right now. But let's go ahead and not talk about the poor man's covered call portion of that. Let's just talk about the idea that I bought Apple shares and I wrote a covered call. Let's go ahead and talk about that. On March 5th, I went ahead and bought at least 100 shares of Apple. That's going to cost me about $170. So I'm going to have to pony up about $17,072 to buy 100 shares of Apple. Now, what we're going to do is this. We're going to tell the greater stock market that we want to sell our shares at 180. If you want to buy them off me at 180 for the time frame that I give you to make a decision, because that's what we do when we write a covered call. We're going to buy the shares. We're going to give somebody a price for which they can buy them from us. We're going to give them a time frame to make that decision. And then they're going to pay us a per share premium. And that is the money that we literally print. Because had I bought Apple at 170.72 and just held on to the shares, I'm not printing money. I'm just holding the stock. It goes up and it goes down. But when I introduce the covered call, now all of a sudden I'm going to print a $1.25 per share to give somebody the right to take away my shares at 180. And I gave them about 1 full month, 30 days to make this decision. So therein lies the printing cash part of this, because I'm going to make some $690 just in covered call premium. That's $690 that I could then buy a dividend paying stock. So let's go ahead and look at the chart real quick on Apple, and I'll tell you why we did that and where we go from here. So look, are you digging the video? Bang that like button. It lets me know you like what I'm doing. And what we're doing is March 5th, we're getting involved in Apple. I went ahead and got involved with Apple. I did the poor man's covered call, but in this scenario, you would buy at least 100 shares. And that's what I did. Paid $170.72. That's what you would have done. You then gave somebody the right to buy them off of you at 180. Yes, way up here. And you said, hey, I'll give you 30 days to make that decision. And for me to hold the shares for 30 full days, you're going to pay me $1.25 per share. And that's exactly what they did. So now, how does this play out? Well, when we put the strike price of $180 for 30 days, it's really simple. Apple either finishes above 180, they take my shares, they pay me $180 per share, I keep the $1.25 per share, and we basically make about $11 in profit. And if you remember, $1.25 of that profit turns out to be covered call premium, which was $700, which we buy a dividend paying stock. Now, if Apple does not finish above 180 in that time frame, we'll keep our shares and we'll do it again. And now if the stock's trading a little bit higher, we might pick the 185 strike, getting even more for our shares if Apple were to go to 185. Of course, the risk is when you buy the stock could go to 160. So that's where making good decisions come in. See, when I decided to buy Apple, I did not buy Apple up here. Looking at the charts, doing a little technical analysis, we find buying Apple at 170 was almost the perfect spot to buy it. I did a video on that, and I definitely did a video for the members, and that's why we got involved. We don't do this willy-nilly. At the membership, I don't just write emails and fire them off at you. I'm going to do those trades. So those trades better be good, or else I'm putting my money at risk, and we're not going to do that. So at 170, for me, was the perfect time. And sure enough, you could see the stock's moving higher, but all I need to do is get it to 180. And if it doesn't even get to 180, I'll keep that premium. We'll do it again. And we'll do it again, and we'll do it again. And that's what we do. So let's hypothetically say that I only make $700, meaning Apple does not finish at 180. Well, that's okay. I'll go ahead and write another covered call, and we'll wait again another 30 days. That's how the game is played. We're giving people the right, but not the obligation, to buy our shares from us, and that's fine. I paid $170 for Apple. I'm going to give them away at $180. Hey, that's a win-win. And on top of it, they paid me money to hold the shares for 30 days. It's really that simple. And that's the printing money part. Now, with that $1.25, let's talk about the dividend-paying stock that I've been buying and collecting. I know the video is a little bit long, but let's finish this up. So with all of these covered call premiums, and you can see Apple's just one of them, $680, 700 here, 1,000 there, 500 here. We have to create a legacy, because I could take all of that money and throw it into the next trade, and that could literally go into the dumpster, because I can get involved with a stock and the stock fall. And then I find myself losing money and I may never recover it. So this is what we're going to do. That $680, I am going to buy a dividend paying stock. Every single month of the year, it's going to pay me a dividend check. So what I want to do is this. I want to find great dividend paying stocks, and we just keep buying them. We keep buying them. Remember at the beginning of the video I showed you the Procter & Gamble trade? Every single time I have a covered call profit, I go ahead and buy some YMAX. Well, YMAX is a yield max fund that it is diversified. It generates its dividend by using options. In fact, it's a basket of all the other yield max ETFs, and it's a bit more stable than some of the very unique YMAX funds like Tesla and Coinbase and Apple and Microsoft. So what I wanted to do was get a little diversified. So I went ahead and bought YMAX. And YMAX right now is paying an unbelievable 56 cents a month. That's 56 cents a month per share. Look, for all of you old timers that invested in closed-end funds, for the most part, you'd be happy if you get 9 cents to 10 to 11 cents a share. That was deemed a little risky. In today's option-based world, these new world option-based ETFs that pay monthly dividends, this is the new age. So I want you to learn about them, get comfortable with them, so you can reap the benefits. See, what YieldMax does is they will take a stock and, never owning the shares of that stock, they will write calls and puts against it. and they will basically generate that monthly dividend cash and send it to their investors. And you'll see that. I mentioned QQQY earlier. That is a company that uses the NASDAQ 100. They do daily options. They pay some 80 cents per share per month. So they're able to pay much more per share. Now, with that said, you have to understand how an ETF or closed-end fund derives their dividend, because at the end of the day, if you don't know how they derive the dividend, that's not a good decision. See, people always run to the biggest dividend. Well, that's not a good idea, because if your dividend-paying stock invests in horsewhips in the era of the automobile and planes, well, you've made a bad decision. But if you do your due diligence and you know what they're using to derive that dividend, you'll be okay. Now, for me, I'm going to use these option-based dividend-paying stocks because I'm in the options game and I understand it. This is the new wave of dividend-paying stocks. Get up to speed, learn. YieldMax is only one company. There's many of them coming, and they're going to pay very large monthly dividends. You can benefit just like I am. And that's exactly what we're doing. We're going to go ahead and write covered calls until we generate enough money to buy 1,500 shares of YMAX. And that's probably going to pay, and I'm hoping that we can get to a point where that pays about $1,000 a month. We'll keep buying shares into YMAX as we go. But what I'm looking to do is try to collect 1,500 here, 1,500 there, and we can then have a dividend tree garden where we might have 5, 6, 10, 20 of these things, just putting some $100 to $1,000 a month of passive cash flow into our accounts. And to be honest with you, all we did was write covered calls, literally printing money. Hey, I know for some of you, you would love to be a part of what I'm doing. Go to cptdashboard.com, click Upgraded Dashboard, get your one free month offer. You're going to see all the stocks that I trade, all those trade alerts, and I'm going to show you those dividend-paying stocks that I'm buying. Hey, look, I would love to welcome you aboard. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.